Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Friday, January 16th, 2026. Stocks finished just under fresh records after a late day fade. The vibe wasn't panic, it was cautious. And the big theme was simple. Rates took the wheel again, and that capped what the index could do. On the S&P 500 Heatmap, it was a split screen. The biggest tech and communication services boxes were red enough to weigh on the headline index. But underneath, a lot more of the mid-sized and smaller boxes held up, with industrials, energy, and parts of financials showing green. Defensives looked steady, not like a full-on flight to safety. That heat map translated into a classic rotation session. Traders trimmed some crowded heavyweight leadership, while keeping exposure alive through cyclicals and select semis. Small caps even managed to edge higher, which is a big tell on a day when the large cap indices couldn't get out of their own way. Here's the catch. The index tape looked calm, but the bond market didn't. Treasury yields pushed to 4-month highs, with the 10-year around 4.23%, as investors repriced near-term easing, alongside renewed noise over Fed independence and leadership. That's a quiet tightening of financial conditions, right as stocks sit near highs. So the next question becomes, who can lead when rates are doing this? On Chatter, there wasn't a single verified market-wide rumor that explained the late fade. Crypto stayed choppy without one confirmed headline driving it. And some of the biggest single stock swings looked like positioning and volatility effects rather than clean news. As always, desk talk is unconfirmed until it hits primary sources. Today's AI trade is no longer just about chips and models. It's about power. The White House and bipartisan lawmakers are now pressuring PJM, the largest U.S. power grid operator, to curb soaring electricity costs driven by data centers and AI workloads. This matters because electricity is shifting from a background input to a binding constraint. Rising power costs are feeding into inflation and pressuring margins for power-intensive tech and industrial firms. The market response is subtle but important. Capital is rotating toward utilities, transmission, natural gas, and nuclear, the parts of the system that actually enable AI to scale. At the same time, grid operators and power-heavy users face regulatory uncertainty as policymakers push for reform. The takeaway isn't tech weakness, but a change in leadership. AI demand is real, but the leverage is moving downstream toward those who control generation, transmission, and reliability. Elon Musk's lawsuit against OpenAI and Microsoft moved into a new phase today after a federal judge ruled the case will go to a jury trial this spring. Musk argues that OpenAI abandoned its original nonprofit open-source mission while continuing to accept billions in funding, claims the court said are credible enough for jurors to weigh. While OpenAI and Microsoft deny wrongdoing, the ruling injects legal and governance risk into the AI trade at a sensitive moment for markets. Microsoft, OpenAI's largest backer, faces questions about disclosure, structure, and the durability of its AI moat. Investors largely shrugged today. But this case matters. It challenges how AI platforms are funded, controlled, and monetized. If the trial exposes limits on profit structures or partnership terms, it could reshape expectations across big tech and cloud valuations.
Apple was part of the index drag story. Apple slipped about 1.05%, and because it's such a heavyweight, that kind of routine down day can keep the S&P and the Nasdaq pinned, even when a lot of other boxes are holding up. Nvidia ended slightly lower, down about 0.48%. The narrative in the tape was AI digestion, with commentary pointing to competition from custom silicon and AMD. Even when the move is small, Nvidia tends to set the emotional temperature for the whole market. AMD stood out on the other side of that semiconductor split, up about 1.73%. With Nvidia red, AMD green fit the day's rotation feel. Investors still wanted AI exposure, just not always through the most crowded leader. Supermicro was the loudest AI infrastructure signal. SMCI surged about 11.01%. That kind of outsized upside, on a day when the indices barely moved, is one of those tells that speculative risk appetite hadn't disappeared. It just wasn't showing up in the index print. Microsoft was a relative bright spot, up about 0.67%, even as other megacap leadership lagged. And it's worth pairing that with the AI governance backdrop. The Musk case against OpenAI and Microsoft is headed to a jury trial this spring. The market didn't react dramatically today,
but it's a real legal and structure overhang to track. Energy stayed constructive. Exxon Mobil rose about 0.59% as oil stabilized near $59 on WTI. On a day when megacap tech was an anchor, steady energy was part of what kept the broader market from feeling risk-off. Financials didn't deliver clean leadership. Goldman Sachs fell about 1.38%, a reminder that parts of capital markets were leaning cautious, even as other pockets held up. That fits the broader theme. Earnings season added texture, not direction, and the market stayed selective. Looking ahead, the big swing factor remains rates and financial conditions. U.S. markets are closed for the weekend, with the next open on Monday, January 19th. On the calendar, Wednesday, January 21st. President Trump speaks, and we get pending home sales. Thursday brings core PCE, final GDP, the GDP price index, and unemployment claims. Friday is flash manufacturing and services PMIs, plus the revised University of Michigan sentiment read. After a week where small caps outperformed and leadership narrowed, the key is whether rotation can continue with yields this high. The wrap. Friday looked sleepy on the surface, but the internals mattered. Rates tightened, megacaps dragged, and rotation kept the market standing. And within AI, the storyline is widening. Chips still matter, but power and policy are starting to matter too. Into next week, watch leadership and yields more than the index close. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.